Hey, Steve Saretsky here. As always, this is Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Any questions, comments, put those below and banter back and forth. I'm going to touch on sort of Vancouver first and then spread out into the more macro perspective. We've obviously talked a lot about and I think it's become very aware publicly of what's been happening in the detached housing market. Particularly as you get higher up in the luxury market, prices easily off 15-20%, fewest sales in 27 years, We know that, but we can clearly see that over the last 3, 4, 5 months, really leaking into the condo market. It never really made sense, as I explained this multiple times, that you can't just have a correction in the detached market and then continue onwards. As land prices were all the value is really in, detached prices were coming down, and in 2017 you had condo prices shooting up 20 to 40% in some areas. So it really is only a matter of time until that trickles into the condo space. At the end of the day is you can manufacture more and more condos, but you can't really manufacture more land, and they're really not manufacturing a whole lot more single family houses. So the fact that those were going down while the condos were going up, in my opinion, didn't really make any sense. But what we're seeing now is typical condo prices are off at least 5% in almost every single area. Condo sales in Greater Vancouver, 6-year low, back down to levels last seen in 2012. So we see the demand pulling off, inventory up 40% in Vancouver. At least certain areas that are more hard hit, that are competing aggressively with pre-sales. Langley inventory for their condo space is up 110% on a year-over-year basis. But I think what some people aren't appreciating enough, and is becoming very obvious to me, is the price discovery in the condo market is much more apparent. Especially in Vancouver, if you look at a high-rise building, most of the units in that high-rise building are going to be virtually identical. Granted, they'll be on a higher floor, maybe slightly different exposure, but for the most part, a condo unit in a particular building, they are very, very similar. And so it's very easy to gauge price per square foot, what units should be selling for. It's very easy to register what the market value is. So as you see these condo prices coming off, they're setting basically lower benchmark prices for that condo building. So maybe before they were selling for $1,150 a foot, now they're selling for $1,100 a square foot. Every future buyer coming into that is going to see that $1,100 per square foot as the new benchmark, and that will continue to set lower as prices move lower. So it's very important, and the price discovery, unlike a detached house where the land size is slightly different, the house can be slightly different models, etc. It's very hard, not only for the general public, but sometimes for realtors as well, to sort of gauge what is fair market for a detached house, because they can be quite unique, and especially when sales are at basically 27-year lows. I was talking to another realtor about this just earlier this week, that a lot of these realtors coming in, not with buyers, they don't even know what to be offering for these houses, because they don't really know what fair market value is, because there's very few houses that are actually selling. In certain pockets of neighborhoods, there's maybe been 4 or 5 sales over the last month. So it's like, well, how do you come in and price this home that's for sale when literally nothing is selling? But I think in condos, there's a lot more turnover, there's a lot more volume, and each condo is very similar, again, in a building. So very important to watch the condo space moving forward here. I think the price discovery could equate to more rapid price deceleration. Another space that I've talked about that relates to the condo market is the pre-sale market. I've talked about the risks involved in this, particularly today as you see sales coming off, inventory going up, and prices coming down. Is when in a pre-sale you're locking in a price today when the building is still going to be 2, sometimes 3 years out from completion. You don't know what that fair market is going to be. You don't know what condo prices are going to be in 2 years. So you're locking in risk. There's risk involved, and the developers have been getting away with it because people don't know any better. They've been locking in these prices assuming that there's no risk. But I'll give you one example, and this is just one example. Is many people have made tons of money in the pre-sale market. It's been a tremendous speculative bet in a rising market. You put very little money down, you make all the upside, you flip the contract. Basically, CRA was turning a blind eye. The government was turning a blind eye. You could basically flip it and not declare your capital gains because there's really no paper trail. Other than a registry with the developer, nothing actually registers in land titles if you're signing and flipping that contract before completion. But now with the open registry that the BC government brought in is now that list, the developers have to remit that list and they have to pass it on to CRA. So you can no longer flip, tax-free. You're going to be audited and they're going to make sure that you pay your capital gains. So that pulls back some of the speculative bid. But I was just through a one-bedroom condo in Navio on the Creek in the South Tower. I was through that pre-sale development back in 2016. I know what they were selling for, so they were basically selling for the one bedroom. We were selling between $1,100 to $1,200 per square foot, depending on the floor, the layout, etc. So the building is now completed. This one bedroom, just as an example, has taken multiple price reductions. They're now asking $1,300 per square foot for this one bedroom unit. It's been on the market for basically 2 months. Clearly the market is fighting that $1,300 price per square foot. But if you look at it, let's just assume he paid $1,150 per square foot, which is basically the building average for one bedrooms, which they pre-sold in May of 2016. So basically the second quarter of 2016 is when they sold these units. A guy paid $1,150 per square foot. He's now trying to resell it at $1,300 a square foot, and he's having a tough time. At $1,150 per foot, when he closes, he's paying not only a 5% GST, he's also paying a property transfer tax, and now when he goes to relist it, he's also paying realtor commissions. So basically, in this case, this guy is going to be lucky to break even. There's probably a good chance that he actually loses money on this pre-sale that he bought 2 years ago in 2016. And the market in 2017, the Vancouver condo market increased by about 25% in 2017. So despite the market running up higher, this guy's still probably going to lose money on his pre-sale that he bought 2 years ago. So again, this is just one example. There's many people that bought pre-sales in 2016 that are going to make a lot of money. It just depends on sort of the price that you pay. But again, I think moving forward, if you're buying a pre-sale maybe 6 months ago, maybe you bought one today, you're probably paying an inflated price because almost all the pre-sales are charging you a markup. And you're locking in a price in a market where the prices are actually declining. So this creates a lot of risks, obviously, for your profit to be eroded, but creates a case where if you need to go and qualify for a mortgage upon completion, which is how these things work, the condo might be worth, say, $800,000 today, but in, say, 2 years' time, if that condo is only worth, let's be conservative and call it $750,000. Well, all of a sudden you have a $50,000 shortfall. The bank's only going to lend you on the appraised value of $750,000. So now all of a sudden you have to basically come up with an extra $50,000 cash. So what they're basically saying is the condo's worth less than what you paid for it. So if you don't have the $50,000 cash, you're probably going to have to take on a second mortgage through private equity, which would be today's private equity on a second mortgage is about 10 to 12%. So imagine carrying that interest-only second mortgage at 12%. You can see the risks involved in that condo market. So in the pre-sale market. So be careful what you're getting into. Again, I've talked about this, and now it is all finally coming to fruition. But this is really all part of a global real estate slowdown. This isn't just a Canadian thing. And again, a lot of people get caught up in, hey, what's happening in my little sub area? But you can see this happening in the United States with higher rates. Mortgage applications are down, I believe, 17% year over year. Inventory is starting to build. Sales are starting to slow. Obviously, we know what's happening in the Australian markets in Sydney and Melbourne. Prices are down 8% on a year-over-year basis. That's now transitioning into a multitude of factors where you're seeing even Aussie car sales are starting to plummet, and that's all part of sort of that wealth effect, which I'll get into in a minute. But again, this is sort of part of that whole bigger macro picture where basically you're later in the cycle. It was a good chart from Jonathan Tepper, Variant Perception. They basically provide the most detailed and well-respected, actually, macro analysts, probably in the space. They basically sell costly newsletters and market research to hedge funds across the world. And so they're pretty much the most well-renowned. And they put out a good chart on the Canadian economy where you can see basically the unemployment is dipped down to sort of new lows. Wage growth is rampant. And that's all signs of a later cycle where basically this forces is temporary inflation, which allows the Bank of Canada to basically have an excuse to hike rates. And then hiking rates, obviously you're contracting the money supply, and has an impact not only on real estate but the overall economy. And that's what you can see in the latest job numbers where, again, pumping out all these great job numbers, but if you actually pull back a lot of the data, a lot of it is part-time, a lot of it is in real estate and construction industry, a lot of it is government workers, but either way, a lot of the media is painting this as positive headlines: strong economy, strong wage growth, low unemployment. This is basically ammunition for the Bank of Canada to continue to hike rates, because the data that is perceived out there is to be very strong. But again, if you dial it back, this is really all part of the later stage cycle of lower unemployment, higher wage growth, rampant inflation, which allows the central banks to clamp down on and hike interest rates. And so you have to look at a point in the cycle here with Canadian real estate. Housing tends to actually lead the business cycle. So, this year to date, from January to the end of June, Canadian home sales are down 14.6%. For anyone that thinks that's not going to have some sort of drag on the economy at some point, is grossly, lacking the information. This will have ripple effects through the economy, and we might already be seeing it's early, but it might already be seeing it in auto sales. What's been basically happening in the auto space over the last 5-6 years is you've had this very cheap credit, 0% financing. People are allowed to finance a vehicle over ludicrous 7-year financing on a car. Obviously, with rising home prices, that creates the wealth effect, creates more equity in your home. Tap that equity as a home equity line of credit. Use that to purchase the new car. Auto sales in Canada have hit record highs. They've increased year over year for the past 5 years, with hitting an all-time high in 2017. But so far through 2018, as of the end of July, auto sales are actually down 0.7% on a year-over-year basis. Again, that's not a whole lot, but it's starting to show that, hey, auto sales are slowing, housing market is slowing, higher interest rates are coming. So again, just sort of understanding, where you are at the cycle. And some people can look at this as, hey, this is negative, this da-da-da-da. But I look at this as very positive. Understanding what's happening in the economy and what influences it allows you to put yourself in a position to prosper in the coming years. If you choose, you can just simply bury your head in the sand and try not to learn and try not to know, and then whatever happens, or you can understand what's happening where we are today and try to position yourself adequately for what is coming up in the near future. Again, nobody knows what's happening for sure, but you can certainly see certain indicators to look for and say, okay, maybe this isn't the best time to be splurging and going out and buying the brand new BMW and 5 investment condos. Maybe it's the time to be pulling back, taking some of your equity. Maybe you have a couple properties, taking some of that equity off the table, some of your wealth that you've created over the last couple of years, cashing some of that out, and being in a liquid position for future deals coming down the pike here. So that's kind of how I look at things. Again, we can see this happening not only in Vancouver. Everybody looks at Vancouver from such a micro perspective, but really all you need to do is look at sort of the bigger picture, and eventually the housing markets will follow. Again, it was sort of joking about this with some people in my office, that everyone's so focused on looking at, you know, the benchmark price or whatever, but all you have to do is look at, you know, you can look at one chart and it'll tell you exactly what's happening, potentially where we might be going. Is looking at mortgage credit growth, which is at its lowest pace since 2001. So anyone that thinks, you know, house prices are going to jack up here 10, 15, 20% or even grow in an environment where mortgage credit is decelerating, anyways, anyone makes their own decisions, right? So that's kind of where we're at today. Really looking and focusing on the condo space with the price discovery. I think it's very important. Keeping a very close eye on the pre-sales. I think as prices no longer rise, it becomes very difficult. It should be very difficult for developers to sell this product at the current asking prices. Hopefully people know what they're getting into. And I was going to touch on one last thing, but I'm now forgetting it. But I'll leave it there. Otherwise, again, any questions, comments, I'll see you next week.